Last week, Donald Trump called out China for allegedly violating the temporary trade agreement. Today, China is firing back, saying it's actually the U.S. that is in the wrong.
But then he also argued that the legal setbacks weren't impacting the trade negotiations with a series of different partners. However, one of the United States' biggest trading partners, China, is one where he said some of the conversations have been stalled.
For a brief moment, it seemed the trade war between the U.S. and China was getting resolved when U.S. trade advisor Scott Bessent, President Trump's top guy on China, met Chinese officials in Switzerland. He came back and told the press that a deal had been made. But here's the shocking truth. That deal was mostly for show. Scott Bessent himself is now saying the agreement doesn't fix the real problems. The U.S. wants China to stop giving unfair support to its own industries. It wants China to stop controlling its currency, the yuan, to boost exports. But here's the catch. China will never agree to that. Telling China to open up its central bank is like asking the U.S. to let Beijing run the Federal Reserve. It's not just unrealistic, it's politically impossible. And while Washington was pushing this agenda, China was already fighting back in a way few saw coming. Instead of using more tariffs, they started dumping U.S. dollars. And now, global currency markets are feeling the pressure. Investors are panicking. Inflation fears are growing. And everyone from Wall Street to small business owners is suddenly asking, what happens next? Before we go deeper into this, hit the like button and subscribe. Because what we're about to show you doesn't just affect politicians or billionaires. It affects you. Let's take a closer look at what really happened. The trade war between the United States and China has reached a difficult point. Although the U.S. has slightly lowered some tariffs, it has introduced even tougher rules that block China from getting important American technologies. These include advanced software used to design computer chips and special chemicals needed for making high-tech products. These actions are meant to slow down China's ability to grow in areas like artificial intelligence and electronics. Trump is accusing the Chinese government of not keeping to their deal.
They violated a big part of the agreement we made. You know, if you read that whole statement, I was very nice to them. I helped them because they were in trouble with the stoppage of a massive amount of business.
At the same time, Marco Rubio has asked the government to cancel visas for Chinese students, especially those studying sensitive subjects like science and engineering. He claims this action is needed to protect national security. However, this decision could harm America's future in many ways. Chinese students make up a large part of the STEM community in the United States. In fact, over 275,000 Chinese students studied in the U.S. during the 2023 to 2024 school year. Many of them work on important research in fields like artificial intelligence, biotechnology, and quantum computing. If their visas are canceled, it would not just be a simple visa change. It would cut off a huge amount of talent that helps the U.S. stay ahead in science and technology. Some people say this policy is unfair because it treats all Chinese students as threats. It does not carefully separate those who might be involved in spying from those who are just studying hard. This broad action might scare other international students away from coming to the U.S., and some current students might leave to study in other countries instead. Also, many technology companies in the U.S. rely on foreign workers, especially Chinese graduates. In places like Silicon Valley, a lot of the skilled tech workers are from China. Losing these workers suddenly would slow down innovation and hurt America's position in the global tech race. What is concerning is that escalating the situation benefits no one. For a while, we hoped that this tension was being resolved, but now talks between both countries are breaking down. U.S. Treasury Secretary Scott Bessent even admits that talks are a bit stalled, and both President Trump and President Xi haven't spoken directly in a long time.
This is going to require both leaders to weigh in with each other. They have a very good relationship.
Without top leaders talking, it's hard to imagine how things will improve. To make this issue worse, the U.S. courts are now stepping in and adding more confusion to the mix. First, the Court of International Trade in New York imposed a total ban on President Trump placing tariffs on any country. Then another high court is contradicting this injunction. This court has temporarily brought back President Donald Trump's tariffs. The original court had declared that Trump had gone too far by calling the situation a national emergency so that he could avoid asking Congress for permission. Now that the higher court has reversed that ruling, many people in politics are once again debating whether a president should have so much power when it comes to trade. While the legal battles continue in the United States, trade talks with China have stalled. Although government officials continue to speak with confidence in public, their private conversations reveal a different story. Optimism is fading, and behind closed doors, many admit that progress has slowed. There are still talks scheduled, but the messages coming from the White House are vague and unclear. One of the most puzzling parts of this situation is the confusion about what Trump actually wants. His advisors have said that talks with China will restart once the president makes his intentions clear. One major issue is China's continued limits on exporting rare earth elements, which are vital for making electronics, electric cars, and military equipment. Even though in the agreement both parties signed in May, where the U.S. lowered tariffs on Chinese goods to 30% and China reduced its tariffs to 10%, China still keeps restrictions on rare earth exports. Because of this, the U.S. sees China as not honoring the trade deal, which has caused more tension between the two countries. At the same time, China claims the U.S. has not kept its promises either because America has added export controls and investment restrictions, especially targeting Chinese technology companies. China believes these actions harm the trust that both countries tried to build through the agreement. To respond to China's restrictions, the U.S. is trying to reduce its reliance on Chinese rare earth minerals by speeding up mining in America and working with other countries for new sources. However, finding and setting up these new supply chains takes a lot of time, and this creates problems for industries that need these minerals right now. But it's not just manufacturers feeling the pain. Investors are seeing the ripple effects too. On Wall Street, a clear pattern has emerged. Every time Trump announces a new tariff, the market drops. When he backs off, it bounces back. This cycle has become so common that traders now call it the TACO trade, which means Trump always chickens out. It shows that people are starting to expect him to talk tough, but then back away when things get risky. Even though some investors make money from these ups and downs, it shows that U.S. trade policy is becoming unpredictable. Unfortunately, experts fear that this nickname would only make Trump double down on his harsh tariffs. Meanwhile, Trump has pushed steel tariffs even higher. The new tariffs now reach up to 50% on some steel imports, which has caused serious worry among other countries, especially in Europe. The United States imports a large amount of steel every year to support its industries, including manufacturing, construction, and automotive. The biggest sources of U.S. steel imports are countries like Canada, Brazil, South Korea, and several European nations such as Germany and Italy. Together, these countries supply millions of tons of steel to the U.S., worth billions of dollars annually. Because of the higher tariffs, steel from these countries has become more expensive for American buyers. This makes it harder for exporters in these countries to sell their steel in the U.S. market, which risks hurting their steel industries and causing job losses. The European Union, which exports a significant amount of steel to the U.S., has reacted quickly by starting emergency talks with Washington to try to reduce tensions. At the same time, the EU is preparing to respond with tariffs on American products like farm goods, cars, and luxury items. This back and forth could lead to more trade barriers, which experts warn could hurt both the US and European economies. But the damage isn't limited to international trade. At home, warning signs are flashing in another critical area, America's bond market. Once considered a safe haven for investors, U.S. Treasury bonds are now facing serious problems in 2025. In May alone, U.S. Treasury bonds lost about 1.2% in value, which was the first monthly loss this year. This drop may seem small, but it shows bigger problems inside the market. Since 2020, investors who bought government bonds have lost more than 7% overall because inflation is still high and interest rates keep rising. The Federal Reserve has been raising interest rates a lot to try to control inflation, which is still above the 2% target of the Federal Reserve. But this has caused bond prices to fall because when interest rates go up, bond prices go down. This is confusing for investors because, for many years, government bonds were a safe way to protect money when the stock market was risky. But now, with both inflation and interest rates high, bonds don't give the safety investors expected. Foreign investors like China and Japan are noticing this change too. Both countries have been thinking carefully about their U.S. bond investments. Recent data from the U.S. Treasury shows that China has sold about $100 billion of U.S. debt since early 2024, dropping from second highest holder to number 3. And Japan's holdings have dropped a little as well. Experts warn that if this selling continues or speeds up, especially with rising political tensions, it could cause big problems for the U.S. economy. This could be very serious because the U.S. government needs to borrow money by selling bonds to pay for things like infrastructure and social programs. If foreign countries stop buying these bonds, the government will have to pay more interest to borrow money, and this will make borrowing more expensive for everyone else too. We might even see a crisis like that of 1994, when interest rates rose quickly and caused panic among investors. But the bond market problems are only part of the issue. Trade tensions and tariffs that keep changing are causing big headaches for American businesses. Many big U.S. manufacturers, exporters, and farmers feel stuck because trade policies keep shifting. Over the past 4 months, the government has gone back and forth between raising tariffs on imported products and thinking about lowering them, only to change plans again. This makes companies unsure about where to invest or whether to expand their operations. A recent survey shows that 42% of U.S. companies that export products expect revenue to drop in 2025 because they don't know what trade rules will look like next. Farmers who sell their crops overseas have seen exports drop by 15% compared to last year, according to the U.S. Department of Agriculture. These problems make the U.S. less competitive globally. Because of this, some companies are quietly moving factories to other countries like Mexico, Vietnam, and India, where trade rules are clearer and costs are lower. Experts at the Brookings Institution warn that this could cause permanent damage to U.S. industries. At the same time, companies must spend a lot of time and money just trying to understand the confusing trade rules that keep changing. Legal teams are overwhelmed, and small businesses and farmers especially are struggling. They are worried about their daily work and future. They keep asking, how can we plan ahead when the rules change every few weeks? The problems in U.S. trade policies are also making other countries nervous. Longtime allies in Europe, Japan, and South Korea are starting to doubt if the U.S. can keep its trade promises. Reports from the Financial Times and Reuters say that some European countries are hesitant to join U.S.-led trade sanctions because they worry America is acting alone. To protect themselves, many countries are looking for new trade partners like China. They are signing agreements without the U.S. to avoid being hurt if America becomes more unpredictable. This slow shift could change the global economy, moving it away from U.S. leadership. The World Trade Organization, WTO, which handles trade disputes, is also involved. It wants to check if countries really use national security as a fair reason to break trade rules. But the U.S. strongly disagrees, saying national security is its own decision. If the WTO decides against the U.S., it could cause serious conflicts. But if the WTO backs down, other countries might start using security as an excuse to block trade. Either way, the global trade system could become weaker. So, what comes next? This ongoing fight over tariffs, trade, and power is creating a risky time for the world economy. It is not just about one court decision or one trade deal. It is about how countries work together in a connected world. With uncertainty growing, the big questions are, will Congress take back control over trade decisions? Will China and the U.S. sit down to make real deals? Or are we witnessing the slow collapse of a global system built on stability, cooperation, and trust? The choices made in the next few months won't just affect politics. They'll shape the economy your children will grow up in. So if you want to stay ahead of these seismic shifts, hit that subscribe button and turn on notifications. We'll keep breaking down the headlines that others miss.